Hey guys, what's up? Welcome to our first market review session. Today is Tuesday, March 18, and today we had a contract rollover, so you can see this big gap, which is almost 200 points, more than 200 points, happened because contract has been rolled from the March contract to the next one, I think, from the September contract. I'm not really sure, but it's the NQM, ESM, GCM, CLM. Okay. So to get started, we always review what we did in the morning. One second. Hey, P. Jones, welcome, brother.
Hey, buddy.
Hello, hello. So in the morning, give me a second. After we had this gap in the morning in Asia, after the new contract rolled over, the market basically in Asia started to drop. And then in London, we manipulated Asia. We displaced all the way back up. We had a charge to sweep, charge you enter here, and you target whatever your target is. And then London failed to take Asia high, all right? And then New York AM just continued the trend what was started in Asia. So I didn't really trade the AM session today. I think silent would be best if silent does the AM the market reviews for the AM session. But we worked on the PM session, so we'll have a look at the PM session in a second. But basically, New York AM opened and it just displays all the way down. Where did it go to? It didn't go to a random place. It went and took out these relative equal lows right here, and it ended the day or ended the drop at Wednesday's first presentation. So if you're an ICT trader, you know that the first presentations on the 5-minute, 1-minute, or 15-minute are vital for the rest of the week. They're vital for your trading. Basically, when I go into the PM session in a minute, we basically based our trades off of those. Okay, so you can see it dropped all the way down here. We had another one. We had another one here, here, here. You can see the dates. This is Tuesday. This is Mondays. This is Mondays as well. But these are different Mondays. This is Monday from 17. This is yesterday's Monday. This one's from week ago Monday. Okay, and this is Wednesday from a week ago. We have another one from Friday. So maybe if the market does decide to drop later on, we can be potentially looking into these. And we have other things here. So these are market rules. You can use them as NWOCs, NDOCs. They attract the price. Okay, the algorithm will refer back to them, and it will use them. So you can see that we dropped all the way down here, and then we gapped up from here, only to come back to them later on in the day. Okay. All right. So after a big day, when you see a big day, let's say you don't trade AM session, you saw big drops. Okay, so what do you expect in the PM session? Do you expect it to continue going down? Possibly. All right, this is what we anticipate, and this is what we base our trades on today. But you can see in hindsight, it's a bit consolidating. So like, sometimes when you see this, like after a big market drop consolidation, people are gonna view this as a bear flag, right? Not us, all right. This is starting to form some accumulation. This accumulation will probably be manipulated down and then continue going back up. Since we swept major liquidity, you can see on the daily that we literally had, we took every low all the way from September last year, and we came back to this daily FEG. So here I'm starting to look some bullishness. And yesterday, I think yesterday was the day before. Yeah, it was yesterday. It was the first time we inverted any bearish entity for the past month. All right here, this daily FEG, we just inverted it. So now I'm looking for long. So any retracement down is actually a buy for me. Okay, it's not literally a buy because it can display so much down, you cannot handle the stop loss. It just means the week we'll be looking for longs more than we'll be looking for shorts. So any short opportunity, we shouldn't really take it. We should just be looking for lows to be taken out so we can jump on the trade and take a long, right? And what we should be targeting probably is that daily volume imbalance right here. So we have this daily volume imbalance right there. Okay, we left relative equal lows here. If I check, 1 second, please. if we check ES, so if we pull up ES as well, we see ES pretty much did the same thing, but what did it do at the lows? Is the real question. So we invest this one daily. We left SMTs right here. These are major SMTs, okay? NQ didn't fail to take it slow, but ES took it slow, right? So I'm looking for longs for the whole week. For the rest of the week, I'm looking for longs. I'm gonna be more heavy size on the longs, but that does not mean we shouldn't take any shorts. We will take shorts. In fact, today we banked on a short. But yeah, the shorts are gonna be high resistance liquidity runs, and the longs are gonna be much better. Okay? So if we drop back to the 4-hour, we see that yesterday pretty much we formed immediate rebalance right here, and that gave us that little pump up. We just base back down. I still think this immediate rebalance should get us much higher than this, because this pump right here, it filled all the inefficiencies. But since the market took liquidities, it should be targeting inefficiencies, right? So that's exactly what it did, right? That's why it came back all the way up to here and come back down. It did not look for these highs. We were not looking for these highs. But what is still missing is this volume balance here on the 4-hour as well, which is pretty much below the daily, I guess. Or that's exactly, yeah, just near the daily as well. So that's my buys for the week right now, and we can just base our trades based on the sweep strategy, or based on what the market offers you based on how you enter the market. So let's go ahead and talk about what we did today earlier in the day. So in the PM session, it was a bit rough. I have to admit, it was a bit rough. We were stuck between this range. Where was it? We took a shorts here, I think. I think it's on Twitter, you can check the executions. But what we basically, when we started the stream, we saw that the market is in between multiple chart presentations above us and multiple balanced price ranges. So you can see here we have multiple balanced price ranges. We have one. So if you check the stream on YouTube, we had multiple price range BPR. So there's one here with this SPC. We have this one with this one. We have this one with that one. We have this one with this one. We have this one with this one. Like, I'm just gonna show you one so you can understand what I'm trying to say. This is the balanced price range. So I was expecting that the market is gonna be pretty, even though it's stuck in the range, we said that, we anticipated that it's going to be more favorable to go long, right? So we have multiple BPLs. You can see we have another one right here. I'm not drawing it exactly, but you guys can get the idea. So we have multiple, and we took an entry right here for the long. In fact, we took a long right here. Once we invest all these BPRs, we took a long somewhere around here. I can't really remember. But the next thing the market did right here, yeah, we entered right there, and the market came back down. We had all these high resistance liquidity rounds, right? What that means is the market is gonna probably dump on us on our trade, but it's gonna wick down and go back up. What it did is it came back down and it wicked so hard. This candle was scary as hell. It wicked out and took out that low, all right? So at that moment, it was very hard to choose direction on the market, because it should not be breaking these BPRs, but what it did is it wicked and came back closed above. So that made us look for longs. All right, we were looking for at this moment we were looking for shorts. Since we closed above these BPRs and all of them didn't really support the price, I was looking for a short here. Okay, but then when I saw that the BPR is being respected from behind, so you can see that we're respecting it right there, and once they closed there, I wanted to take a short. But then I looked and I was like, we took the lows. All right, that was a pure manipulation. That was like the most obvious manipulation candle you can ever see. When you watch it live, it was pure. It was instant. From here, it opened there. Like, I mean, it literally was there at the open of the candle, and it came back up. Okay, there was nothing we could do. Our stop loss was below this BPR. So I was like, okay, let's close this trade and look for a long. Okay, so we took a long here. We had like $100 loss. We took the loss. Then I looked at my stop loss. My stop loss has to be below this low, and that was about $600 loss. And I was like, I don't really want to, because we still have this high resistance to the low side is now high resistance to the upside. Like, it's vice versa. So I closed this trade, and unfortunately, the next candle it just went up all the way to our target. So we had that loss. I'm being transparent. We had that loss on that market. And now we came back all the way above these BPRs, so we should be looking for longs. I trust these BPRs, okay, because now we took the liquidity, we are above the BPR, so anything low resistance, it should be low resistance to the upside and low and high resistance to the downside. Again, you can reuse this. These are not supply and demand where you only utilize them once. So we took a trade again. Because above the BPR, we looked for this breaker that we should be taking trade on. I think where was the breaker? There was a breaker here. No, it wasn't breaking. We just entered at the BPR right there. Once it touched the BPR right there, and we had our stop loss below the BPR. We don't really need to put it below the lows. And unfortunately, the next candle it just dropped and worked us out right here. Next candle went back to break even, and then finally it dropped back down to stop us out. So we had a couple of losses there, and pretty much the market just continued. It went eventually it went and took out the targets that we wanted. Then it came back all the way down. Here, I'm like, okay, we're obviously seeking destroying. So I'm gonna take a short, and I'm gonna target the we took the short on NQ. I want to target them. I want to target the shorts now, the midpoint of this wick, because this wick is probably the market is gonna come back to this wick, and then blast off. So if we look at NQ. Made I think $900 on this trade right there. So once it came back below this BPRs, I smacked a short here, and we got out exactly at the midpoint. So you can see on the execution on Twitter, we got out right there. We entered 2 contracts, stop loss at the high, and we went out for okay. I didn't really want to take the low out because it's a seek and destroy. It's gonna come back few ticks above the high, below the high, then it's gonna drop. Few ticks, drop. Few ticks, drop. It's gonna come back, take a low out, and then go back up. It's gonna be seek and destroy. You can see we take a high, we drop. Take a high, we drop. We take a low out, we pump. Take a low out, we pump, and then it just keeps doing that. So I'm not looking for lows. I'm looking for non-obvious targets. The midpoint of this wick, we took the short, we got out there. So we retained back like half of our losses, like our drawdown, and then from here it was pretty much easy. From this moment, once we had this displacement, I was looking for longs. We scalped another long here. Once we invest this 5 minute. It's 1 minute. I think it was this. It was a 5 minute BPR as well. I'll check in a second. Let's have a look. There was a 5 minute BPR right there. You see the BPR, guys? If I can draw it. Once we invest this 5 minute BPR right there, I went ahead and took a long. Okay, where is it? Right there. We closed above it. We came back. I took a long here, and we added to the position, and we took the same trade on ES, and we targeted pretty much not the high, but this rejection block right there, and we eventually got the trade. So that was another win there. And afterwards, it went all the way back up, and then it started displacing again, once again, down. Sorry, hold on. No, we took the trade here. We targeted this high, we got it for $300. Then it came back down. Then once it invest this 5 minute BPR, I know it's a bit confusing, guys, but if you watch the stream, it was confusing. It was a really hard day. Once we invest the BPR, right there, and ES was right there as well, we took a short right there, and we target again the same. This volume imbalance right here. I think it was like this. I don't know where we took the trade. I have to check where we did it. But there was a volume. This one right there. This one right there. We were targeting this volume imbalance, and eventually with a stop at the high once we broke out, and we made. I don't think this is the exact trade, but we literally short the BPR and we target this volume imbalance that was unmitigated, on the 1 minute, and yeah. That was pretty much it. After that, the market literally just went back up. I think that's correct, right? Yeah, that was it. So it was a pretty much jacked up live stream. It was not as clean as the ones we had, the other 12 streams we did. It was a little bit hard because we were trading consolidation. We anticipated the market is going to be up and down in here because there's hype resistance to the upside, high resistance to the low side. But the setups were all high quality. Like trading, we had so many BPRs. Our stop loss below them should not be stopped out unless the market wants to go lower. All right. So right here, when we took the first actual loss, our stop loss was here. I was like to you guys, if we close below here, I'm gonna close my trade and I'm gonna go short. Unfortunately, this candle opened with a volume imbalance and it wicked us out of the trade and eventually came back straight to where we were supposed to be looking for a short. So that terminated our trade and it terminated any reversal idea we really wanted. So it was a bit disgusting. It was a bit disgusting. But nevertheless, we ended the day green. Had about 5 losses, but we ended it with 8 consecutive greens. Each trade was like about 300 to 400, so we made 3k back easily. It was a hard trade. Best thing was not to trade this. Pretty much, that is about it. So you guys now know that my personal bias for the week, it's not for the daily bias, it's a weekly bias. So I'm looking for longs, big expansions to the upside, and if you decide to take a short, you can short level to level. So you have level to level. Okay? For example, you short this level to this level, you long this level to this level, etc. You short this to here, anything in between. You don't really want to be, even though it looks very bearish. On the high time frames, we're finally, since yesterday, we're back to bullish or neutral, but I want to say bullish because I have SMTs, we have inversions, we have order blocks. Okay. Just show you again. We inverted this. We have SMTs at the lows with ES. Right there. And we have clear drawn liquidities. Okay, we have this volume imbalance. That's what I want to be targeting. My next target would be midpoint of this wick and this order block right there. Okay. Doesn't have to do it tomorrow. It has to do it in the week. Okay, it's a weekly profile. Well, and we have this fight this daily as well. Any questions, guys? How did you guys do today? Tell me about yourself. Did you guys do good? Did you guys do bad? I know most of you did good today. Do you have any questions regarding the market? Like, are you confused about? Like, what did you do anything wrong today that you don't understand why the market? Like, you were in a position and then you just got stopped out prematurely. We got that. We got stopped out prematurely so many times. So many times today. It's insane. Could you explain BPRs to me when you catch a moment? I have no idea what those are. Of course, brother. So BPR is basically a balanced price range. Okay, let me turn everything off. It's a balanced price range. So this, you guys all know, this is a imbalance, right? Or if you want to be more fancy, it's a FVG, fair value gap. If you want to be more fancy, it's called an efficiency. Okay, so what happened here is the market has dropped. It's one-sided. It offered sell side, but it did not really offer buy side. Okay. Here, this is a BC or a imbalance to the upside, or an FVG to the upside, or a buy side inefficiency, sell side, no, buy side imbalance, sell side insufficiency, right? A BC. So it's imbalanced, as the name implies. It's imbalanced. It's not really balanced. So the price has to come back and rebalance it. So this here, this drop back here, rebalance this FVG. This is now not an FVG. This is now a balanced price range. Okay. I'm gonna come to you with an answer because I think you guys might have a question. Like, how would we know, right? Like, I don't know how to choose that, right? That's true. This is a high level BPR, which you may not be able to spot easily. And I'm a practical guy. I like to give you guys easy ways to find BPRs, right? So this is a BPR, but this is hard to find. This is a BPR. How do you know that? We dumped, we pumped. This area is balanced. We dumped again, we pumped again. This is very balanced. The price should not really come back to this area. This area right here is very, very balanced. So you can see the price, even though it's not a PD array, I'm drawing here. It's not this FVG, it's this area. Look, the price comes back at Wixit and drops down. Some might say this is an FVG, that's the reason why it's doing. Some might say this is the inverse. This is a BPR, okay? Again, that's how to spot. It looks like consolidation. So how would you notice the best BPRs that I always use in my streams? This is a BPR. We have a pump, we have a dump. The place where both of them intersect is your BPR. So this is the start, and I draw it like this. This portion of this bullish FVG and this portion of this bearish FVG intersect right here. It offered buy side, it offered sell side. This is now balanced. This is a BPR. If the price comes back to it, it's gonna reject down. It's gonna give you a rejection. Okay, let's have another example that we did today. Here's a BPR. We dumped, we pumped. So it's like a V shape. Those are your best BPRs. Here is this portion of this FVG and this portion of this FVG. They intersect right here. And look at the reaction right here. The market pumped, 1,000 of ticks, dumped straight to it, came back up, dumped again, pumped back up. This is a very high probability BPR as well. Okay, so right here you base your entries. You'd find like a kind of like a breaker block, something like that. So here you have like a breaker block, a low, lower low, higher high. This is your breaker block on the 5 minute. You drop to the 1 minute or something, but let me do it like 1 minute. Oh, one shot, I think. Instead of entering at the top of the breaker, you can find a sniper entry inside of the breaker. So my best entries are BPRs inside the breaker. Okay, you enter there, zero drawdown. You put your stop loss below the breaker, the BPR for a nice turtle soup, and look, it's insane. You just had yourself 100 points. Let's see one of the sums that we did today. So BPRs make the life harder to go down. It makes a high resistance. So here we had so many BPRs, but the market was literally not disrespecting me. It was respecting. Look, it came to this BPR and it dropped. Came to this BPR, it pumped back up and it came back down. So this is high resistance. We shouldn't be trading here. We did. I don't know why we did, but we did. Okay. Once it left the BPR, it became easy to go. Once it left the highest BPR, it became easy, smooth, low resistance, below this area, above this area. Okay. So this is what we were looking. We're looking to, once we close below this BPR, I'm looking for shorts, but the candle was so fast down, there was nothing we could do. Okay. Show you another example. This is a harder to spot BPR. We have a bump, dump, pump. Where do they intersect? This point of this FVG and this point of this FVG. Boom. Perfect entry. Perfect entry. Right there. So how would you trade it? Would you just turtle soup into it? Nope. We have a high, higher high, lower low. So we have a breaker block here. Okay? We have a breaker block. I would personally either short the breaker block here, or I want to like start position here and then add the rest here, or I want a better risk to reward. I would wait for this BPR. And you can put a stop loss on top of it, but I would rather just keep it, yeah, on top of it, and then boom, beautiful drop. Does that make sense, brother? All right, you're welcome. So is the market open? No, it's not open yet. Here, look, beautiful, beautiful V shape. We have a BPR right here, very tiny one. This is a BPR. So you have a BPR, you have a change state of delivery right here. Market respected it, and eventually market the space back up, took out the highs, dropped back down. Now it should trace him back to equilibrium, maybe to OTE. So maybe if you want to trade Asia, this is how you trade it. You have equilibrium and OTE. So you found something like this. Put stop loss below the low. You have mental stop loss here. So if the body closes below 0.79, you close the money. You'd close the trade automatically, or just below this BPR, you'd fully close your trade. And what would you target? I would personally target, because I'm bullish, I would target 1 standard deviation. which we already got. So I'm going to use this fractal right there. This will be your target. Okay. This is a trade idea you can take in Asia, maybe. If you want the best risk reward, it might be here, but you might not get an entry. Okay. Any other questions, guys? You guys like these market reviews? I'm not really good at market reviews. I'm more better at like trading live, like tape reading the actual candles, not looking back. But I'll probably improve my. I'll practice doing better market reviews. All right, nice. Sure, brother. Ask a question. Why does previous daily low, previous daily high, and equilibrium reverse the price often? Because those are targets. That's the algorithm is referring back to these levels. Once it takes it, it's content for the intraday. If it's not content and if it doesn't reverse, it means you're gonna have a continuation there all the way back down. Right, so let's have a look. Here we have previous daily mid. Let me make it dark. We came back to weekly open, okay, and previous weekly mid. Oh, that's why it was so stingy to going down. It was previous weekly. It was weekly open. Okay. So you see, it acts as support and resistance. If they break, they would continue going down. If not, the market is content. It will sweep it. There's liquidity there. Okay. It's target for the algorithm. Algorithm targets these levels. It references. It has to. It's a code, so it has to reference points in time, and points. So weekly open is a point in time, all right? And it's a price level. It's price and time. Okay? The price is 667, and the time is Monday. Market open, okay? So you can see we won't. Look at this. Yeah, the weekly open is stronger than the daily open, and the weekly and the daily previous daily low and high is strongest. Okay, we also have previously weekly mid, which we already got on the drop down. So look, today the market dropped all the way from what previous daily high. It failed to hold it. It broke below. Once it breaks below with displacement, you should be looking for shorts, and it goes going down. It's easy to say in hindsight, and your next target with the previous quarterly low, because the previous quarterly low is stronger than the weekly low and the daily lows and the daily highs and the daily opens and the weekly opens. So this should have been your target. But what did we do? We just spaced through it as well. We had no single reaction. We closed below it, spaced down. So we're gonna go to the next level. What's the next level? Previous weekly mid. Did we do any rejection? We had a nice rejection here. Okay. Oh, do you start looking for longs? No. You must always have a 5-minute as your barometer. So if we invest in a 5-minute after a big drop, that should be your starting position to start looking for longs. Okay. Here, for example, we invest this, and we did not really. Sorry, we formed the FPG. We did not really break through it yet. So we're still bearish. Oh, sorry, I'm trying to show you the one from here. You see? Oh, we closed below. We are spacing back up. Oh, is this the end of the day? No, we're still respecting this 5-minute. Okay. We came back to where now? Weekly open, previously weekly open. Weekly mid. Market goes down. You're waiting for the same thing. A 5-minute FEG to inverse. When did we inverse it? Right here. This moment right here, we had also SMTs. Here you should start looking for longs. Why? Because you're at a nice price. The market is referring to a nice price, and you're at a place in time where the market is, where the algorithm is referring to it. So here, if you're looking for longs, here is where you should be looking for longs, and that is exactly the trade we took. That I pinged everybody in the chat. We had a choice right there, and we took it, and boom, we target the high right there for nice 40 points. Okay, and pretty much after that we never left the thing. So this was the end game for the day. Okay. How about if we start from the top? Let's say you want to do the same thing at the top. Here. We came back below this low. what was it? Previous daily high. We displaced back up, right? We did not just enter a trade. What did we do? We inversed a 5-minute right there. That's your first signature. You get a change in start delivery right here or a chosh. Boom. Price respected. You can take your long. And that was pretty much a nice trade. 30 points. We also invest this as well. Okay. There you go. Now, same thing at the downside. We dropped. Actually, I'm not going to say the other side, but really explain that. But that's it. Okay. Does that answer your question? Weekly opens are always Monday, yeah. You don't need to know these. Okay. The thing is, you should be targeting these levels. Look, I'll give you guys a nice icebreaker. Do not enter at these levels. Do not enter at these levels. Okay, you do never enter at these levels. Oh, we respected this, let's go long. No. Use these as targets. If you're short from here, you target this. If you're short from here, you target this. Short from here, you target this. Sorry. If you're short from here, you target this. If you're short anywhere here, you target this. If you're short anywhere, you target these levels. You do not enter at them. Okay? You don't enter here. You just see it. Watch the price. It's respecting it. Okay, now, once we move away from it, you can find an entry. Which indicators do you use for these levels? Linda says, which levels, which indicator? So this one, Spaceman, BTC. It's a free indicator called Spaceman, BTC. You click on it. And I'll show you my settings. It's going to be on YouTube if you don't have it, but you can check my settings here. Screenshot them, worst case scenario. Look at the SMT also with the ES and NQ. We have a minor SMT as well. This is the SMT we took on the trade. You're welcome. Yeah. Look, FPGs. Look, I'll simplify your life. Breaker blocks are good entries. No. BPR, yeah, no. Imbalances, FEGs, okay? And weekly levels, daily levels, like the previous day, low, high, etc. Those should be your target. When you're trading, don't target highs and lows. Target FEGs, okay? FEGs are your targets, okay? Target them. Or don't say, oh, we have an FEG here. I'm going to go short. It works out, okay? It works out, but you probably if you enter an FEG, you're going to probably target a low. Right? You never got it. But if you're long from anywhere, your targets has to be there. It's easier. It makes your life easier, okay? Because imagine you're long here and you're targeting the high. You have these FEGs on your way. These are going to give reactions. We know it's going to give reaction. It may be a strong reaction, maybe a slow reaction, but either one of these reactions, it's probably going to scare the shit out of you. So get out there. Is equilibrium just Monday mid-range? Equilibrium is based on the dealing range. So what the dealing range is for the current price is, we have a high, we swept this high, we swept this high, and we swept this low. So this from here to here is pretty much your equilibrium. Here's your equilibrium. Again, it's almost the exact same as the weekly open, you see. Below it is discount. Above it is premium. You don't want to be long in here, you want to be long in here. You don't want to be shorting here, you want to be shorting here. So today in our stream, I didn't have these levels on. We were trying to short this the first couple times, we were failing because of this. So have them on, just toggle them on and off, okay? If you see the price between two of these, like here and here, don't trade, just don't trade. Just don't trade. So FEGs for targets, but if that's the case, What do you personally use for entries? My entry model is pretty simple. There's many ways you can enter. Okay. Chosh. Basically, supreme session low, inverse, chosh, you enter the chosh. Okay. But the one we do on the market on the live stream is easy. So you have a breaker block, you have a low, lower, low, higher, high. So this is your breaker block, right? Actually, let me show you a better example. You have a low, lower, low, higher, high, right? Stop for the 1 minute. I want to show you guys the most extreme. We took both those trades that I just showed, but I want to show you guys the most obvious ones. Here, we have a low, lower, low, higher, high, right? We have a breaker block. This whole thing is a breaker block, by the way. Gonna take the highest one. This is your breaker block, okay? Price goes above it, you go long here. I'm not gonna go long here. I'm gonna go long inside. If there's a BPR, I'm gonna take that. Here's your BPR. You take along here, and you target whatever happens. Okay? So it's like a unicorn entry. If you're familiar with unicorn entries, that's your trade. So here, for example, when we took the short that gave us the money, this short here, yeah, this was here. We had a breaker block, so high, higher, high, lower, low. This is your breaker block. Oops. We didn't really take the short here on the breaker block. We took it here on this BPR. Wait, hold on. Sorry, not this one. This one here. Yeah, we took the trade inside a BPR. So you have a BPR inside you have a breaker block and a BPR. This is your unicorn entry, which is high probability. And I told you guys on stream, this BPR right here is the best entry. So if you didn't enter with me there, you would get the best entry here. I was gonna add one here as well, but I was already in 2 contracts. Right there. This is your trade. Stop loss above the breaker block. Stop it. That's it. BPR can get invalidated, but a BPR getting invalidated is, it automatically tells you the market is gonna be high resistance. So in other words, if you're in a trade, you're gonna get slapped. You're gonna get cooked, as your name, as just like your name. You're gonna get cooked. Okay? It should not break above this BPR. If it does, it means it's not bearish enough. Okay. Here, for example, BPR, BPR. Don't just enter at BPRs. Find a breaker block. So here, low, level, low, higher, high. We have a breaker block. You have a breaker block. Don't enter the top of the breaker block. Enter inside the BPR. Boom, beautiful. Stop loss below the BPR. You're welcome. Yep. So here you see the market pumping, you're gonna be, oh, I'm gonna film it. No, you don't need to, guys. You don't need to. It's gonna come back to the beat. It's gonna come back to you. It's gonna come back. It's gonna come back. Let's say you missed out on this trade here. You were not confident enough. Well, no problem. You have another BPR right here. Once we close above it, you come back here. You take your trade here, and you go back up. And also, you still have another breaker block right here. Low, lower, low, higher, high. Don't enter the top of the breaker. Come back to the BP here. Enter your trade here. Okay. Alright guys, this is the first time we're doing a market review. Was that helpful? Was that wasting your time? Like, please give me reviews. Give me a review of my review. It's my first time. I don't like hindsight. I don't like backtesting. Because I don't know where I entered. I don't know what I did. And it's easy to say like, oh look, this is easy. Oh look, this is easy. Oh look, this is easy. Right? But on the market, it's not gonna be this easy. I like seeing it in real time. Okay, we have SMTs. We just displaced. We made a change of state delivery right here. We have a breakaway gap right there. We just invest this FEG here and this FEG here. Okay, great. So already have targets in my mind. We have one standard deviation. One standard deviation, right? You can see how accurate it is. And then what do we have else? We have a breaker block. We just found a breaker block. Okay, great. So once it comes back to it, I'm gonna take a long. What about this? Do you have any BPRs? Do you have any BPRs? No, we don't. Okay, so what's my best thing? I would rather enter at the change of state delivery, that's CSID. Or we have this FEG right here. So this portion of this FEG, this portion which is inside the breaker block, is your actually unicorn. This is your unicorn. So I would rather enter here. That's a high quality trade, and I'll put my stop loss right there. Okay. If it fails, it means I'm offside, and there was nothing better I can do. There was nothing better that I can improve on that trade. Beautiful. Okay. That's what we've been doing for the past 10, 12 days, and we were doing great. Amazing. We need this daily, dude. All right, no problem, brother. The whole point of this review is to teach you guys like what we're doing. Okay, so. And it's not going to be confusing. Maybe it's confusing right now, but we're doing this. We've been doing this for we're doing the same exact entry for 2 weeks, exactly 2 weeks. 12 trading days is about with 2 weekends. About almost 3 weeks, right? It's going to repeat. So if you didn't get it this time, you're going to get it next time. And all my videos, all the streams we did are on YouTube, so you can go ahead and watch them. I always watch other people's YouTubes, like from all the live streams they did to learn. So you can do it. Have like a tea, have like a shisha, just watch the stream over, like again. The YouTube is shisha traders. It's right, only shisha traders on YouTube. I would even pay you 16% of my pro payout just to get this daily. I'm gonna hold you to that. You're not legally obligated to give me 69% of your thing. Alright guys, thanks for tuning in. We'll see you tomorrow then. I think, yeah. I'll make a little poll on the announcement, so like it if you like the stream. Okay. The preview. We'll do it daily. Alright, we live at
Thank you, Luke.
You're welcome, brother. We live to see another day. Thanks, B. Jones. Thanks, guys. See you guys later. Peace.